Okay, welcome to Virtual Learning Network online classes and topics is journal. Journal, what is journal? Journal is actually a basic book of accounts. Basic book of accounts in which the transactions are recorded at first. Transactions are recorded at first and it is chronological records. And our format of journal. Date, particular, then ledger folio, LF, then debit amount, and then credit amount. All transactions are recorded into different places. Like this one. And the style to enter the date in date columns, as suppose today is my 4/2015. LF stand for ledger folio. LF stand for ledger folio. And now, how the transactions are recorded or journalized? Then we have taken imaginary examples like first transaction number 1, Ram started business with cash by rupees 5 lakhs. Second transaction, he deposited rupees 2 lakh into bank. Then transaction number 3, he purchased goods from A on credit by rupees 2 lakh. Then 4, purchase goods for cash rupees 50,000. Next, sold goods to be rupees 2 lakh on credit. Sold goods by bank rupees 3 lakhs. paid rent rupees 10,000, paid salary rupees 50,000, received interest on investment rupees 10,000, and charged interest on capital rupees 20,000. This is 10 transactions, and how these are generalized by using the golden rules of accounting, and these transactions are generalized into the journal by using the golden rules of accounts. Like first transaction, Ram started business with cash rupees 5 lakh. In this case, we analyze the transactions or identify the transactions that what is happened. In this transaction, it is happened that cash received by you because you are working on behalf of the firm. So cash received by you, and a person Ram is giver. Therefore, you have received the cash. So cash account debit. The basic entry is cash account debit to capital, because we use the capital in place of honors by rupees 5 lakhs. So we can generalize this transactions as first is cash account debit to capital by rupees 5 lakh and in credit 5 lakhs. Second is he deposit rupees 2 lakh into bank. In this case, bank is receiver and bank is also personal account. So the receiver account debit, that means bank account debit, and credit what goes out. Cash is goes out from the office into the bank. Therefore, cash account is credited by the amount of rupees 2 lakh. So the journal entry will be bank account debit to cash account by rupees 2 lakh and then rupees 2 lakh. Then he purchased goods from A on credit by rupees 2 lakh. In this case, you have received goods from A rupees 2 lakh. So in the case of purchase, we have used the purchase account in place of goods. So in this case, purchase account debit to the giver, and giver is A. So purchase account debit to A by rupees 2 lakh and 2 lakhs. Then the fourth transaction, purchase goods for cash rupees 50,000. You have purchased the goods and paid the money. So you have given the money to the shopkeepers or suppliers and received the goods. So debit the receiver, purchase account debit, and credit what goes out, cash goes out. So to cash by rupees 50,000 and 50,000. Then next transaction, sold goods to B rupees 2 lakh on credit. In this case, B is receiver, so B will be debited. B debit to credit what goes out and goods is goes out. So in place of goods we have used the sales. So B debit to sale by rupees 2 lakhs. Then sold goods by bank rupees 3 lakhs. In this case we have sold the goods and goods is goes out from us and we receive the money in the form of bank. Therefore bank account debit to sales account. Bank account debit to sales by rupees 3 lakh, and here also rupees 3 lakh. Then paid rent, and rent is nominal accounts, and according to golden rules number 3, all expense and losses will be debited, or debit all expense and losses and credit all incomes and gains. So rent is expenditure, therefore it will be debited by the amount of rupees 10,000. So the journal entry will be rent account debit to cash by rupees 10,000 and 10,000. Then paid salary, salary is also nominal account, and the same entry will be passed like salary account debit to cash by rupees 50,000. So salary account debit to cash by rupees 50,000 and 50,000. Then received interest on investment rupees 10,000. In this case you have received cash, therefore cash is debited, and interest on investment will be credited by rupees 10,000. So in the transaction number 9, cash account debit to interest on investment account by rupees 10,000 and 10,000. And last transaction is charge interest on capital rupees 20,000. In this case we have not received any amount and not paid any amount, therefore we have charged only. So the capital is increased and we have also lost something, that means an expenditures of interest on capital is charged, therefore interest on capital account debit and to capital account credits. So the transaction number 10, interest on capital account debit to capital account by rupees 20,000. So this is the ledger entries, this is the journal entries of given transactions. And now subsidiary books of accounting. Cash book, a subsidiary book of accounts in which only cash transactions are recorded. No any credit transactions is recorded in this book. And now types of cash book. there are three types of cash book. One is single column cash book, then double column cash book, and last is triple column cash book. Format of single column cash book. It is a T-shape accounts. Or ledger accounts, in which date, particular, ledger folio, amount. In this side it is called debit, then date, particular, ledger folio, and this is the amount. And this is the format of single column cash book. And now double column cash book or discount column cash book. Discount column cash book. Date, particular, ledger folio, discount, and amount. This side is debit, then date, particular, ledger folio, discount, and amount. And now format of triple column cash book. Or bank column cash book. The most important book of accounts. This is date, then particular, after that ledger folio, then discount, then cash, and last one is bank, same as here, bank, cash, discount, ledger folio, particular, and date. This is date, particular, ledger folio, discount, cash, bank, debit, date, particular, ledger folio, discount, cash, and bank. Now some transactions for preparations of cash book, single column. First, balance of cash book as on April 1st, 2015 was rupees 50,000. Received from A rupees 20,000, paid to B rupees 10,000, bought goods for cash rupees 20,000, sold goods for cash rupees 1 lakh, paid salary rupees 10,000, received from B rupees 50,000, paid interest rupees 10,000, received commission rupees 20,000 and paid rent rupees 20,000. Records these transactions into cash book. Now format cash book. This is the format of cash book. This side is debit, this side is credit, date, particular, ledger folio, amount, date, particular, ledger folio, amount. Now, first transaction, balance of cash book as on 1st April 2015. After that, these transactions are occurred by the organization. So, April 1st 2015 to balance BD 50,000 posted into cash. Then second transaction, received from A rupees 20,000 to A 20,000, then paid to B rupees 10,000, April 3, 2015 by B 10,000, then bought goods for cash rupees 20,000, by purchase 20,000, then sold goods for cash rupees 1 lakh, to sale rupees 1 lakh. Then paid salary rupees 10,000. My salary rupees 10,000. Then received from B rupees 50,000 on 7th of April to B rupees 50,000. Then paid interest rupees 10,000. My interest on the date of 8th of April 10,000. Then received commission rupees 20,000 on 9th to commission 20,000. Then paid rent rupees 20,000. And 10th of April by rent 20,000. And now total of debit side 1 lakh, 2 lakh, 40,000. 2 lakh 40,000 here, and close the accounts by double line. Then from 2 lakh 40,000 deduct all these amount like 30, 40, 50, 70. 2 lakh 40,000 minus 70,000 equal to by balance CD, which is equal to 1 lakh 70,000. So this is your cash book or simple single column cash book. And now double column cash book or bank column cash book. In bank column cash book, we have done a different entries called contra entry. Contra entry means any transaction recorded, any transactions is recorded into both debit and credit side simultaneously, and such entry is called contra entry. And I indicate the indication of contra entry is C written into the column of ledger folio for this regard. And now the transactions. For contra entry, are number one, cash deposit into bank, and second transaction is cash withdrawn from bank for office use. And the journal entry of both the transactions are first, deposit into bank account debit to cash account. Second, cash account debit to bank account. In both the case, you have seen that the cash and bank both are either debit or credit in the journal entries, and simultaneously we have used in cash book both the cash and bank. Therefore, the entry is required into the both of sides like debit and credit. So it is entered as a contra entry. And no any other transactions are required to enter in both the sides simultaneously. Only these two items in which we have make the transactions either deposited into bank or withdrawn from bank for office use. Sometimes the questions, sometimes into the questions it is given that the proprietors withdraw some money from the business for his or her personal use. Then it should be noted that such kind of transactions is not recorded in both the sides. In this case, if a proprietor withdraw some amount from the bank for a personal purpose, so just simply we make the entry into the payment side, that is credit on the account of drawing. Now, some transactions for contra entry. On April 1st, balance of cash book are as follows: cash 2 lakh, bank 4 lakh. And other transactions are sold goods for cash by rupees 6 lakh, purchase goods for cash, purchase goods by bank rupees 2 lakh, paid into bank rupees 5 lakh, received from Ram a check of rupees 5 2 lakh. Paid rent rupees 10,000. Announced check deposit into bank paid commission by check rupees 5,000. Received from A rupees 10,000 for cash. And withdrawn from bank for office use. Rupees 50,000 for office use. These are the entries. Now prepare the cash book by using these entries. So at first prepare a format of triple column cash book, and this is being done as this is a date and particular, ledger folio, discount, cash, and last is bank, and here bank, then cash, then discount, then ledger folio, then particular and date. And now date, particular, ledger folio, discount, cash, bank. Same as date, particular, ledger folio, discount, cash, bank. Now transaction number 1, April 1st, 2015 to balance BD, brought down 2 lakh in cash and 4 lakh in bank. Only one entry is passed. Then second, sold goods for cash by rupees 6 lakh. So second 2 sales by rupees 6 lakh by cash. Now we can reduce this column here for clarifications on the numbers. Then third one, purchase goods by bank rupees 2 lakh, and it is a transactions on date 3rd, so April 3rd, 2015 by purchase bank 2 lakh, so nothing into the cash column, all amount entered into bank column. Now paid into bank rupees 5 lakh, that means deposited into bank, and it is a contra entry. So written as 4th, to cash, bank column rupees 5 lakh, and here is dash, and in LF we indicate the letter of C for contra, and same time by bank into cash column rupees 5 lakh, and also written here as C In this case, the bank account is increased and the cash balance in your cash book is decreased. Therefore, the adjustment is being made. Now, received from Ram a check of rupees 2 lakh to Ram. 2 lakhs, it is treated as cash receipt. It is because it is deposit after a day. Because here this check is deposited on 7th of April. Therefore, check receipt is treated as cash receipt and entered into the cash column. Then next is paid rent by rupees 10,000. By rent 10,000 into the cash column. And then Ram's check deposited into bank, and now a check received in 5th of April should be deposited into 7th of April by passing the contra entry. So same entry is being done, like to cash 2 lakh into the bank column and written here in LFHC, and on the same time by bank rupees 2 lakh into the cash column and written here at C, and then paid commission by check rupees 50,000. So by commission 50,000 by check. So it is entered into the bank column. Now received from A rupees 10,000 for cash to A, 10,000 for cash and recorded into the cash column. And last transaction withdrawn from bank rupees 50,000 for office use. Just the opposite of deposit entry. So here to bank cash column 50,000 and contra by bank by cash bank column 50,000 and it is also contra entry. And now in last by balance carried down, that means CD, and at first you have total on cash column. So it is 2 plus 6 8 plus 2 10 10,60,000 is a total of cash column, and then in this column 10,60,000 minus 2 lakh minus 7,10,000. So 1060 minus 7,10,000. It will be 3,50,000 and it is written here as 3,50,000. And same as for bank column, totals of bank column debit side is 4 lakh plus 5 lakh 9 lakh plus 2 11 lakh, and it is 11 lakh. Then here it is also 11 lakh written. Then deduct 11 lakh from 11 lakh by 3 lakhs. So it is the balance of 7 lakh. 11, 3, 8 lakhs. And this is all about triple column cash book. And now next topic is BRS, Bank Reconciliation Statement. What is BRS? BRS means a statement or monthly statement prepared by the organization to to meeting the balance of cash book and passbook. Whenever the cash book and passbook balance is not agreed, then the statement is prepared by the organization called bank reconciliation statement, and it is a monthly statement, or every month it is prepared by the organization. It is because a bank holds the passbook and organizations hold the cash book, and there are so many transactions between the both of two identities, and sometimes they have no any information to each other. Therefore, the balance is mismatched of cash book and passbook. So, for the purpose to making the match of the balances, we have prepared this statement. And why the balance is mismatched? There are so many reasons for mismatching the balance of cash book as well as passbook. The very first reason is check issued but not yet presented for payment. Then second, check deposit but not cleared. Then third reason is that bank charges. Then fourth is check dishonor. And fifth is bank interest. Sixth, direct payment by bank. And seventh is direct deposit by customer into bank. And this is 7 reasons by which the balance of cash book and passbook is not tallied. The very first reason is check issued but not yet presented for payment. That means there are so many expenditures incurred by the organization, and to meeting these expenditures, organizations issued check to the third party, and third party is not presented such cash into the bank. Then in this case, the balance of cash book is reduced at the time to issue the check by the organization to the party, but bank has not reduced it until the check is presented. So the difference is being made. Then check deposit but not cleared. There are so many checks received from the third parties by the organization, and they have collected and entered into the cash book, into the receipt side, and then deposited into bank, and unfortunately or by having some reasons bank has not cleared the checks, then the balance of passbook is less than that of the balance of cash. And next is bank charges. Bank is doing day-to-day services, then it is deducted some amount or debited the organization's account directly without any intimation to the organization. Therefore, the balance of passbook is reduced and cash book is not reduced, then balance is mismatched. Then check dishonor. Sometimes we have deposited the check into the bank by virtue of additions in receipt side, but the bank is not cleared due to some specific reasons, that is called bank dishonor, and the balance of passbook is until less than that of the cash book. Another is bank interest. Bank is also credited the interest directly into the passbook, and organizations has no any information regarding it. Therefore, the balance of cash book is less than that of the balance of passbook. Then direct payment by bank. Sometimes the organizations authorized the bank to make the payment for continuous purpose expenditures like insurance premium and all, and bank is make the payment directly from the accounts of organization, but the balance of cash book is unaffected for this payment. So there is a difference between cash book and passbook on this transaction. Then direct deposit by customers into bank. Whenever we have sent the reminder to the debtors for collection of fund on maturity, and the customer is unable to pay the amount into the office, but he or she is deposited directly into the bank account, and when the balance of passbook is increased due to the depositions of customers, and cash book is unaffected, and then there is a difference between both the balances. And now how can you reconcile the accounts, or how can you prepare the bank reconciliation statement? A unique formats of this purpose is that item number, items, then debit, and then credit. Some people also written as ledger head. But item is good. So balance of passbook, balance of cash book always be debited and written in debit. Balance of passbook always credit, and in this format it should also be credited. Then overdraft of cash book credited, then overdraft of passbook, it is debited. And now all transactions or 7 different aspects they have already explained by me. They are written as it is in any formats or any balances that you have prepared the BRS. Suppose you have prepared the BRS by using the base of balance of cash book, then it should be debited, and then rest of entry remaining the same. Whenever you have prepared the BRS by using the balance of passbook, then the balance of passbook is written in credit, then other rest of entries remaining same. Then overdraft of cash book, it should be credited always and written in credit, and other things being same except the interest or bank interest. In the case of overdraft, bank interest shifted from debit to credit, and rest entries remain the same. So the first entry, check issued but not presented for payment, always be written into debit side here. Then second, check deposit but not cleared, always be credited. Then number third, check dishonor always be credited. Then bank charges always be credited. Then bank interest debited in case of balance and credited in case of overdraft. Whenever you have prepared the BRS by using the basis of overdraft of any balance, either overdraft of cash book or overdraft of passbook, then you have used the interest on overdraft on credit side, and rest entry remaining same. Then direct deposit, direct payment by bank, always be credited. Then direct deposit by customer, always be debited. And then in this BRS, you have prepared, suppose you have prepared BRS by using the balance of cash book, then you have added debit column at first and then deducted from credit. Then if you are prepared BRS by using the overdraft of cash book, then you have total the credit side at first, and from credit side you have deducted from debit side to getting the payment of another books. So this is the format of BRS. And now one example of BRS and then solve solutions. Balance of cash book is 30,000. After checking the bank statement, the following discrepancy are found. Number one, 3 checks, rupees 10,000, 5,000 and 15,000 issued but not cleared, but not presented for payment. Number 2, checks deposit rupees 50,000 has not been cleared so far. Bank charge debited, by rupees 1,000. Bank interest rupees 2,000. Check dishonor rupees 5,000. Direct payment by bank $6,000. Direct deposit by customer $10,000. And now BRS, debit, credit, and then items, balance as per cash book 30,000 in debit, then check issued but not yet presented for payment, Total of these three, 15 plus 15, 30,000, and it should be debited. Then check deposit but not cleared by rupees 50,000 into credit. Then bank charges, $1,000 in credit. Then bank interest, $2,000 in debit. And then check dishonor, $5,000 in credit. Then direct payment by bank, $6,000 in credit. And direct deposit by customer, which is 10,000 in debit. And now taking debit side as a balancing side, so 30, 30, 60 plus 10, 72,000 and 72,000, and from 72,000 deducted rupees 62,000, like 50 plus 151, then 5, 57, 56 and 6,000, 72, 62. From 72 minus 62, balance as per passbook, equal to 10,000. And this is your answer. Same as if in the question it is given that the balance of passbook, suppose it is balance of passbook, is rupees 20,000 and other transactions remaining same, then the answer will be balance as per passbook $20,000 written here, then this remains same and other are remain same excluding the total. And now in this case we have totaled on credit side 20,000 plus 50,000, 70,000, then 71 plus 5, 76 plus 6, 82 plus 10, 82,000 total. And from 82,000 deducted 42,000, then balance as per cash book will be 82,000 minus 42,000 equal to 20,000, and this is your answer. And it's all about bank reconciliation statement. And bank reconciliation is completed. And thank you for this classes. And next topic will be final accounts in next class.